Never trust an AI with an algorithm, because while it can write clean code, it has absolutely no concept of real-world risk. In my last video, Claude AI built me a Bitcoin strategy that made me a beautiful plus 30% profit. It looked incredible, and everyone in the comments thought we found the Holy Grail. But behind the scenes, it was a ticking time bomb. The moment the crypto market experienced a sharp flush, the AI completely panicked. It took a devastating $497 loss in a single trade and dragged our drawdown to a horrific 22%. If you ran that live, it would have wiped out your account. So I stopped trusting the bot blindly. I went back to TradingView, ripped the script apart, and manually injected a professional risk architecture. Today, I'm showing you the exact modifications we made to cut that drawdown in half and turn a reckless AI script into a bulletproof machine. Let's look at the data. To understand why this strategy was a ticking time bomb, we have to look directly at the original code. In our first version, the entry logic was simple. We used a 50 and 200 EMA crossover to find the macro trend. And we asked the AI to buy pullbacks whenever the RSI dropped below 50. For exiting, it relied entirely on a volatility-based chandelier exit trailing stop. On paper, this sounds like a standard, solid trend following system. But here is where the logic completely broke down in the real market. Because the RSI threshold was set too wide at 50. The code was triggering buy orders on tiny, insignificant dips in the middle of choppy sideways markets. Even worse, during a sudden violent market crash, a purely volatility-based trailing stop takes too many candles to react and recalculate. Because the original script lacked a fixed absolute emergency floor, look at what happened to the execution metrics. A single sharp Bitcoin flush bypassed our slow trailing stop and hit us with a massive $497 loss in just one trade, dragging our total drawdown to an unacceptable 22%. The code was fundamentally broken against crypto volatility. We had to change the math. So, how did we take this chaotic AI script and fix it? We performed a 3-step surgical operation directly on the code. Step 1, injecting the emergency circuit breaker. First, we needed an immediate airbag. I overrode the AI's exit logic by injecting a hard parameter called max emergency stop loss and set it strictly to 2.5%. This tells the execution engine the exact millisecond a trade drops 2.5% below our entry price, market order out. No waiting around for indicator calculations. The moment we compiled this patch, the entire downside distribution shifted. Those out of control massive losses were instantly capped and cut off. We officially put a concrete floor under our capital. Step 2. Next, we had to stop the bot from bleeding capital during choppy sideways price action. I went into the entry block and changed the RSI threshold variable down to a strict 47. By doing this, we forced the algorithm to be patient. Instead of buying on tiny, shallow dips, it is now commanded to wait for a deeper, more definitive cooling off period before validating the macro trend. When you filter out those low probability noise trades, the equity curve changed completely. The drawdown flattened out beautifully, making the strategy incredibly robust. Step 3, activating the pyramiding engine and live example. Now that this strategy was safe, the final step was scaling our returns back up. But increasing our baseline position size would just reintroduce the high risk we just fixed. So I added a pyramiding system. Let's look at a perfect real-world example right here on the chart. The macro trend is fully bullish because the price is trading above our moving averages. Look at our first entry labeled RSI pullback. The bot didn't rush in at the top. It waited for the RSI to drop below our strict threshold of 47. Caught the dip perfectly and opened the baseline position. As the trend surged upward, look at what our new pyramiding engine did. As soon as the trade went 0.5% into profit, it automatically executed a second entry, adding another units to aggressively compound our gains. But watch what happens when the market suddenly reverses. Instead of letting the trade bleed out, our emergency circuit breaker instantly steps in. Look at these two purple arrows labeled SL activated. The exact millisecond the price hit our maximum risk ceiling, the script executed a cool mechanical market order and cut both positions at exactly minus 0.17748. Patient entry, aggressive compounding, and an instant mathematical exit. Look at the ultimate verdict after compiling all three optimization layers together. As you can see right here on our main dashboard, our total net profit jumped straight back up to plus 21.43%, pulling in over $2,143 in pure profit from a $10K starting account. But here is the most important metric. Our maximum drawdown didn't spike back up to the dangerous 22% level because of our emergency circuit breaker and tighter entries. It stayed completely restrained at a comfortable 11.67%. If we dive into the return details, look at this profit structure. Our gross total profit was huge, and even though exchange commissions naturally took their bite, our expected payoff sits at 17.86 USDT. This means that mathematically, factoring in every win, loss, and fee over a 2-year period, the strategy nets an average of nearly $80 pure profit per trade. But to see the real proof of our risk management surgery, we have to look at these trade analysis details. Now look at the trades distribution. Out of 120 total trades, we have 46 winners and 74 losers. Yes, we lose more often than we win. Our win rate is 38.33%, but in a professional trend following system, you don't need a high win rate to be rich. You just need to make sure your wins are bigger than your losses. Look at the math right here. Our average profit is plus 1.52%, while our average loss is kept at a tight minus 0.94%. and look at the extreme ends of the spectrum. Our largest profit was $625, but our largest loss was strictly capped at $304. Thanks to our 2.5% emergency circuit breaker, those catastrophic $500 drops are officially gone. Our average time held in trades sits at 19 bars, meaning the bot is patiently riding out the trends without overtrading. And this data proves it beyond a shadow of a doubt. We officially turned a reckless, raw AI script into a professional, mathematically sound trading machine. The big lesson here is simple. Never trust an AI with an algorithm straight out of the box. Tools like Claude are incredible for generating baseline logic, but it takes human intervention, stress testing, and rigorous risk architecture to make it safe for real capital. I have fully updated this open source script with all the structural risk fixes we discussed today. If you want to grab this exact Pine script and test it on your own charts, all you have to do is drop a comment below and saying code, and I will make sure you get the direct access link right away. Don't forget to hit that like button and subscribe to the channel so you don't miss the next part. Thank you to everyone who commented on the last video and helped point out these blind spots. Stay safe on the charts, manage your risk, and I'll see you in the next video.